Well, welcome everyone. Thank you for coming for this plenary session, breakout session. And what we thought we would do is try to cover as many areas as possible in the hour that we have. That's why we have this very instructive slide above our heads, which actually highlights the pitfalls as an investment vehicle. Now, the art is called many, many different things. It's called a commodity, it's called an asset, and it's called art. So we disagree fundamentally at the beginning, actually, because some of us believe it should be called art, some of us believe it should be called an asset, and some of us, like me, believe it's a commodity. So we disagree from the very beginning. But before we go ahead, let me introduce you to our esteemed panelist on the far right, not politically, but in terms of our seating, Philip Hoffman, the Fine Art Group. Next to him, Howard Lewis, who is the director of the Schorr collection, which is an excellent collection of numerous categories of art. To my immediate left, the scholar and economist Clare McAndrew, who writes an annual report on art as, well, I suppose the value of art and the value of the market. And on the extreme left, Lucian Simmons, who is head of restitution at Sotheby's, based in New York, and in a former life was a lawyer. So these panelists are well equipped to deal with the questions that we have. And I'd like to start, actually, with my first question. Bearing in mind, before we go, actually, the art market, I don't even know how large it is. It's not huge. It's about the same size as the diamond market, which is about 51 billion.
That was euros.
Euros, 51 billion euros. Make the conversion to something. Yeah.
Dollars.
There's not a lot of fat on the bone, but there is something there to get it. I mean, it's gone up since last year, 7%. And there have been 1,530 lots, which exceeded €1 million each. So that gives you an idea. And I would say anything over, disagree, Claire, please, but anything over €50,000 has got to be investment value, hasn't it? Anything under is a bit of a risk. But do you want to answer that now? Or?
Well, it is a very polarized marketplace. So of that $68 billion, about half the value is in that market for over $1 million. So it's only like 1% of the lots that are sold at auction, for example, make up half the value of the market. So it's very skewed. All the data that you come across in the market is very skewed because it's very top end. Some of them, Philip can talk about it probably as well. Some of the highest value things are probably not the greatest investment because when you're buying things for 100 million, there's only so many people that you can in turn sell that to. It's a very thin group of buyers and sellers at the top end. So it's, I would argue they're probably not the best investments. They're bought for various reasons. Some of them investment and some of them to turn around, but a lot of them are bought and held.
We the Fine Art Fund Group mainly invest in art from about $250,000 up to $10 million per picture. Ironically, one of our clients bought, just talk about high-end art, just to give you some numbers and give you some insight. One of our clients bought a Van Gogh for $9 million about 20 years ago, and we sold it for him for $63 million about a year and a half ago. Now, that sounds like an awful lot of price growth, but actually it's about 10% per annum over that long period of time. And actually, he was very disappointed. He thought it'd make $100 million and wasn't thrilled. But I think there are a lot of professors who analyse different parts of the art market. Professor May Moses, who I sat on a panel in New York not so long ago, said that actually art at the bottom end of the market is where you make money. And I violently disagreed and said that's just a minefield buying. I've just come from Frieze Art Fair 2 minutes ago. And there is supposedly at the lower end of the market where you can buy works of art for $5,000, $10,000, $20,000. And can you make money out of it? Highly, highly risky, because the chances of that particular young artist making it is pretty risky. But at the other end, artists like Chris Ofili, Glenn Ligon were all selling on the opening minute of the fair, and that was at $250,000, $500,000, $1 million this morning. So I think that the analysis could look at many different ways, but our approach in what we do, we look at the top end, and what we deem the top end is sort of $250,000 to about $10 million per picture.
I mean, the caveat is beware that this is how value is applied to contemporary art. I don't know anyone on the panel would disagree. One has to be aware that it does go through this mechanism. however great and however successful they are on the day, they have to matriculate through the system. So Lucian, in that sense, does one have to be aware of the mechanisms of the market as much as one does the quality, so-called, of the work?
Absolutely. I mean, from an auction house perspective, we're selling works of art brought to us by individual collectors, by museums, basically by primary owners. And what we do in looking at pricing is we look at what dealers sell things for, we look at what the markets, the art fairs are fetching for works of art. But you're right, one does have to be aware of the metrics and the fact that people will basically try and get whatever they can for a work of art. So in an art fair, the price which is being asked for work doesn't necessarily reflect what it actually sells for. It could sell for more or it could sell for less. Yeah. And at auction, sometimes things will be priced attractively because they come from an estate maybe, or sometimes things will sell or have an estimate which is much above the world record for an artist. Again, trying to establish or market make.
I mean, is there a preferred method of buying art in order to make a profit in the future? I mean, what is the most, I don't want to answer this, what is the most sensible method of purchasing art?
I don't think it's a sensible method in any kind. I think that, it's look, I can say that from my point of view, looking at the question, actually, which was not actually up there, but derived in front of what we're here to talk about today, about art as an investment. You see, for me, that's a difficult question, or actually an impossible question to answer, because art is not really an investment in any kind of conventional way. It's a speculation, for sure, but that's not quite the same thing. I think the point I would just say is that art is not quite the same as other markets. It's not regulated. It's not liquid in any conventional way. And I think a lot of people come into the market as first-timers, or people who maybe just inherited wealth and weren't quite sure what they had, and don't quite understand the mechanics of it. I mean, obviously, Lucian touched upon a point, I think is right, that, it's a bit hit and miss in terms of the differential between what you would, I would say, the difference between the asking price, which is what you would like, and the real price, what somebody will pay. And there's a big disparity.
I mean, I remember when I was at Christie's for about 12 years, and I remember sitting around the board table and mentioning the word investing in art, and I think the board nearly crucified me for even suggesting that anybody would consider investing in art. Now, if you talk to, we've got one or two people from Sotheby's and Christie's here, and if you ask them about the word investing in art, you'll find that a lot of them are talking to their clients about that's quite an interesting investment, that's done really well, and it's an about turn. And in fact, the people who said investing in art's anathema to them, and it's all about passion, power, and it's not about investing. I remember speaking in front of the mayor of Paris and the Minister of Culture in Paris, and I was the only Brit talking at that event, and they said it's all about passion and it's about buying what you like. And I said that's bollocks, because you buy, at the end of the day, you will not spend $10 million on a Rembrandt if you think it's worth $500,000, or if you could buy 10 more next week. So money comes into it seriously, and if you've worked incredibly hard and built up your fortune, you don't really want to piss it away on buying something that there are going to be thousands of them coming out and you've misspent your money. So I disagreed vehemently with all the panelists from Paris, and the Figaro said the only guy who made any sense was actually it is about the money comes into it. Is it about investment? And is it about asset class? I'm not convinced art's an asset class. I don't think you can go and just put $1 billion. I remember JP Morgan, I don't know if there's anybody from JP Morgan here, but JP Morgan asked me to do a Max event chat, and remember Henry Kissinger was the advanced speaker before I got up, and they said, look, if we're going to invest in art, we've got to invest a couple of billion, otherwise it's a waste of our time. And I said, I don't think you can put a couple of billion into just buying art at auction or whatever and come out with a 10% compound return over the period. I think that'd be highly risky and extremely difficult. It'd be interesting, and I don't think you could trade in and out of it. You'd have to take a very long-term view. And the guy said, well, we'd like to take a 2 to 3 year view, not a 10-year view. The art market as an investment is about looking at the long term. Although admittedly, I remember Art Basel last year, we bought a picture for $1.5 million and sold it for $1.7 million an hour later. So the IRR on that is infinitesimal. But it's very unusual to do that in the art market. It's not very easy and it's illiquid.
Well, I'll just stop you in your tracks for it. But I mean, you raised some very interesting points. So one being liquidity. How much more liquid is the market now, particularly for contemporary? I'm just looking at the circumvention of the market by Hearst and Murakami, and they went straight to the third market, the auction market. They avoided the dealers. I mean, and his paintings were still wet, virtually, when he was selling them in that Sotheby sale in 2008. I mean, liquidity through things like black lots, Paddle 8, internet sites, which are now moving more stock, perhaps. Is it
If I
easy?
start at the beginning, when I first joined Sotheby's 20 years ago, there was a saying that if something was sold at auction, if a painting was sold at auction, you had to wait for it to refresh for 5 or even 10 years before you could offer it again, because the value would fall after it left the auction room. It would take that long to rise up to where it was and maybe appreciate beyond that. What we've seen in the last 4, 5, 6 years is that things will now come back to the auction block within maybe a year and a half. So things are coming back very snappily and are coming back at a much advanced price. So there's increased liquidity in the traditional art market, but you're asking about the electronic media, about Paddle 8, and I think they're also
Sotheby's
increasing
eBay.
liquidity. They're increasing the rate at which things are sold. Certainly Sotheby's has a link up with eBay. And the other thing is that now there's more information available electronically. So now you can go online and you can look at price records for a Warhol or for Liechtenstein over the past 20 years. And so everybody has an even playing field in terms of basic data, but then there's a question of interpreting that data.
And that's only auction data.
That's only
And
auction data.
the stuff that's selling online now in the online-only sales is not getting put online
That's
either.
true.
So it's kind of gone, it's a very opaque marketplace and a very illiquid marketplace, and it's taken a few steps forward in terms of more information online, but the movement of sales online has actually taken the market a few steps back because they don't publish their prices. Even the online auctions don't publish their prices. So, and whatever you're working on, the auction sector is only about 48% of the total market. The rest is galleries and private sales, which don't publish any prices. So.
And yet your report is the only report which actually does make a...
I do, but it's imperfect. I mean, you have
Yeah,
to,
of course,
to fill that gap, you have to use surveys. So we survey about 7,500 dealers, and we capture the middle. If you're looking at the distribution curve, we don't have the two tails. We have a nice representation of the middle, but we don't have the very top galleries or probably the long tail of the very bottom, but it gives you some
absolutely.
some idea.
No, it's very useful.
I
Does
think-
this
okay.
diagram help, by the way, if you're looking at the screen? I mean, in terms of the way the market operates today with these new... That's a wonderful diagram. It's from a book, actually, which is coming out by me at the end of this month. I thoroughly recommend it. I mean, it's called subliminal advertising. I keep slotting them in at key moments. Sorry, did I interrupt? Philip, no, you wanted to.
I just think for some of you are obviously art professionals, but others probably this is the first time you've ever listened to anything about art and investing and the art market. And can I just set a bit of a backdrop to this, which I think is required, which is, I went into Ontario Teachers Pension Fund 10 years ago, and they said, why should we allocate 100 million to art? What's so different? What's interesting about it? And I went in and I said, look, the basics are, it's about a very small market. It's about 60 billion of art sold a year, of which the investable market is about 15 billion. It's about demand and supply, and the majority of the works of art that we're looking at, we as investment managers, is a shrinking supply. So there are not, as far as I know, more Picassos being made, hopefully, or Rembrandts coming out, although sometimes they do appear. And a lot of, I remember being on a Sky News television where they said it's disgusting investing in art, and it's all this art that goes into warehouses never seen again. And actually most of the art that wealthy families and collectors buy, they end up gifting to museums. So these wonderful Picassos and Monets and Van Goghs and Christopher Wools, whatever, get put into a museum, and then the museums aren't allowed to sell them. So the supply is constantly shrinking, apart from perhaps Damien Hirst, who's producing at vast quantities. But if you go back, these non-living artists, dead artists, are not producing anymore, and there are fewer in private hands. And so the economic rationale to those of you who are professional investors is that there's a shrinking supply, there is massively, massively growing demand. When I started, we had about 10 million of assets under management. We manage about 500 million, and we reckon it'll be 1 billion in about a year or so. And the type of wealthy clients who are coming in are not just quirky collectors, but massive institutional and family offices who are looking to allocate. The Chinese, I've just seen we've got about 11 Chinese coming into town this week, and they're looking to spend $10 million, $20 million, $50 million between them on art that they would never have spent. And so this is a big concentration of demand coming into a tiny market. And I just want to set that as a backdrop.
Well, we have raised China, which is very pertinent because, as perhaps some of you will know, the Chinese economy is less robust than it was 12 months ago, allegedly. How are we seeing? Because I mean, Lucian, you've got a big auction coming up in New York, which you have allegedly guaranteed for $500 million, the size of Philip's modest little fund, and that's just a couple of days. But you're very reliant on very small sectors of geography to push this over the line, aren't you?
No, is the answer. The sale you're referring to is the estate sale of the old owner of Sotheby's, Alfred Taubman, and it's an enormous sale going from classical antiquities through old masters to impressionists, all the way through furniture and contemporary art. But the thing, actually contrary to what you say, the thing which we're seeing time and time again in our impressionist and our contemporary sales is we have participation from 20 or 30 different countries per sale. So put that in context, we have typically 70 or 100 lots in an important evening sale. And if you have 30 different countries participating, that means you have a huge spread of potential clients. So for this particular sale, we're very optimistic.
I'm reassured, actually.
Yeah.
Thank you. Now, China, the model, again from this exquisite book, is slightly more direct than the elaborate diagram you will remember in the Western markets where you have this hierarchy. Now here you basically have the auction house, the art fund, artists and dealers, don't you, Clare? And there aren't that many dealers in the market anyway. And things are driven by the auction market as opposed to this gradual price progression that you go through with the Western system. Now, does this create bubbles? And those who collected Chinese contemporary art, or indeed modern, have they got a bubble on their hands, do you think?
Well, it is. It's about, I mean, the auction sector accounts for about 70% of China's value. That's in mainland China, and it is very auction dominated. But I mean, it's, this is why the downside risk of the market is completely lessened over the last few years. It is such a globalized marketplace in terms of buyers and sellers. I mean, China's been the biggest of those emerging markets. And it did so well up to 2011 when everybody else was kind of tanking after 2009. But since then, it's really, really slowed down. And I mean, there's the you can point to economic factors. I think that's really over-egged, the economic factors that have slowed down the Chinese market. It's a supply issue. It's the quality of things that are coming onto the market. And it's the anti-graft campaign. There's people don't want to gift art anymore. And there's a lot of other things that have been cracked down on in the Chinese market that have really...
Regulation.
They're introducing regulation, which will be good for the market in the long run, but it's taken a big dive in the short run.
That's interesting.
But you do see Chinese buyers gradually coming out into Western sales. We've seen a few of those in the last year, buying at higher levels all the time.
Things like that, which went to the developer of, I think, isn't it the American Embassy in London, isn't it, the Wandar Group, richest man in China. Sold by, unfortunately, the opposition, but never mind. Pitfalls in the market. We've heard about the problems of macro changes and how that can affect buying, but authentication, is it real? Is it a forgery? The various factors you need to consider when you buy a work of art which is not new.
Well,
I mean, you must be extremely familiar with all this.
I think I'm not familiar with anything, actually. I mean, obviously, listening to this panel, I think what I would say is that, first thing to say, what we have are principally old master paintings. When you deal with old master paintings, obviously you are dealing with matters of attribution and provenance, and I can't see them in my glasses.
Nor can I, actually.
I still can't see it.
But I remember it being very, very instructive. Authentication, provenance, condition.
Yes, I think what I'm trying to say to you is that when you are buying, I think, so if you're buying contemporary, it's very straightforward. It is what it is. You know it's by, you know it was made, and to some extent, the path is very straightforward. When you're buying things which are older, there's a big issue around what it is, what it's described as, who it's by, and so on and so forth. I think it goes on to a bigger theme, which for me is important. I don't think most people take enough time and trouble to work out what the hell they're buying half the time. People buy it because it's there, and it's like, I'll take that, and that one in green as well. And that, unfortunately, is not the way to go about it. No. You need to be a bit more discerning, you need to be a bit more careful, you need to take time. But the problem is we live in a world of instant gratification. That's a big problem, where it's all about now, not in 5 minutes or tomorrow, but now. And unfortunately, people do not learn around the subject. I'm sure that you would know, and I'm sure Lucy as well. 50 odd years ago, if you were serious about buying art, if you were lucky...
I don't think Lucy remembers that at all.
Anecdotally, we were aware of it. Anyway, 50 odd years ago, if you were lucky, you came under the wing of a dealer, and that dealer would say to you, it's like, first thing we're going to do, we're going to wander around a few museums and galleries, and see what your eye is like, what you're drawn to, what you're not. And by the way, whilst we're at it, it's like, here are 6 books I want you to read. Just so I can see you're serious.
Come to your reading list now.
I'm sorry?
Come to your reading list now. You're reading.
Well, they'll come whenever you like. But what I'm trying to say to you is, at that point, the dealer may say, it's like, maybe you're ready now to buy the odd thing. But it's all about now, and that's a big problem, I think, in the market.
I mean, I went into a house, I won't mention which country it was, where I went into the drawing room and he said there's a 10, a 20, a 50, a 5, a 10 and a 15. And I was looking around the room and thinking, are we thousands, hundreds of thousands, millions?
Which currency for that matter?
And which currency? And that we were in millions of dollars. There's $100 million in the wall. And that was what it was about. And so, what drives the art market, what Howard's been involved in is expertise and connoisseurship and passion. And money might have come out of it. They might have made a lot of money. They might not. Taste change. And people say, does the art market always go up? No, it doesn't. The headlines in the newspapers, we haven't got any journalists on the panel, but the headlines in the newspapers seem to make out that the art market is booming. Some sectors of the art market are booming, not many of them. If you take English Georgian furniture, you probably would have bought a nice Georgian bookcase for £40,000 20 years ago. Today you might sell it for £10,000. You would have lost 75% of your money. If you bought Victorian pictures, the taste, people aren't that interested. People are very interested in contemporary and modern furniture. People are very interested in contemporary and modern and impressionist art. People are very interested in Canaletto from the old masters because that's a brand name that everybody's heard of, or Rembrandt. There was the Rothschilds just sold these huge collection of Rembrandts to Holland for 130 million. Now, if it'd gone on the auction block, it probably would have made 250 million because of the provenance of the family and all the rest of it.
I think that's right. But I think the really important thing to understand is there are probably about 24 artists who are probably brands.
Yep.
Rembrandt, Canaletto, Warhol, Richter, there's a whole bunch of them out there. And really, those are the kind of, the epicenter of the modern art collecting.
Yeah, every new collector comes to me and says, can I have I'd like one of those.
Let's be helpful. In contemporary art, we're looking we're looking at essentially Picasso, modern Picasso, Warhol, Basquiat.
Well, Basquiat's kind of...
Well, he's circulating. He's liquid. But anyway, there are these 10 names. Can any of us enlighten us to tell the audience who these 10 people are? Picasso's the obvious one.
Yeah, in the
I bet there's one you won't mention. Anyway, carry on.
Well, the contemporary field, you're looking at Richter, Gerhard Richter, Basquiat, you mentioned already, who's still very, very strong. Rothko is very strong. We have an amazing Rothko.
And you've got a nice one coming up, haven't you? Yeah.
We have a Twombly for sale at 70 million.
70?
Anyway.
So Twombly is strong.
But it will be strong.
Will be strong. Will be strong.
And then there are the Chinese, Chanda Chen.
They're not in the same.
Well,
they're not
maybe
quite
not
at the same
there
levels.
will come a time. Do you think there'll come a time, Claire, when
There have been a lower price point.
That's
but
true.
It is, yeah.
Does that mean that there's some fat in that market, or do you think that is the ceiling?
I think it's not going to rise rapidly now because of what's happening in the market. So I think it could have gone, if everything else hadn't happened, it could have gone got better.
I think the other point to make is that if you take a single artist, you can have a massive spread of values. So, for instance, if you take Gustav Klimt, the famous Austrian artist, you can buy a Klimt drawing for $40,000, but you can also spend $200 million on a painting. So there's a massive spread between the two. And it doesn't mean 40,000 is too little or 200 million is too much. It just means there's a massive difference in what people are prepared to spend.
Surely.
And the thing with art is, the trouble with art as an investment is the only means of valuing it is finding somebody who's prepared to spend the money, and that's the value.
And that is slightly the danger of the online art price databases, is that you see these things and people don't know. There's a lot more information, but you still need a certain amount of expertise to be able to digest why that one is 100 million and why that's 40,000. Some of them are very obvious, but there's some things that are sold that are very similar, that are vastly different prices.
That's the danger. Is the connoisseur, the final selection of that particular image, particularly with people like Modigliani. What kind of Modigliani is it? Has it got a sinuous net?
Subject, because first of all, Modigliani was very frequently copied.
Yeah.
And therefore, unless you are really you really got a very good eye, it's very hard to discern what is real and what is not. And if you're paying a lot of money, you do need a little bit more certainty than that. So, I mean, I'm not sure he's just the best example, but there are many artists out there who I would say, you know something, variable. Some great things, some not so great things. And the problem is, as I said before, if you don't do your homework, you don't read around the subject, you don't ask questions, you know, a lot of people are very embarrassed about their hand on saying, I don't know. I do it all the time. I've got no idea what I'm talking about. It's like, I don't mind admitting I don't know. I go see somebody who's more expert. But the problem is that people are very wary of exposing their weaknesses and their flaws. And because everything in the modern world is so visual and so immediate, there's nowhere to hide.
I think the one lesson, if you would take one thing away from this meeting, is get professional advice before you touch the art market.
From you?
No. I'm saying get professional advice. No, I definitely. There are tons of, you know, there's a lot of people who, but you've got to find out who's good, who's going to give you honest, unconflicted advice. Conflicts of interest are a big issue in the art market. I remember, there were a few funny stories, but the ironies. I remember a lady came in and saw there was a Monet on the wall, and I was with Lord Carrington, who was my chairman then, and she came over and had a look at the Monet, and she said to her husband, darling, that picture's got the same blues and greens as our wallpaper. And if we buy that picture, we won't have to redecorate the drawing room. And Lord Carrington said, you know, that's a lovely idea. And she bought it for $5 million. Now, she had no idea, she'd heard of Monet, but had no idea what she was doing or whether it was good condition, didn't do a condition check. I mean, because it had been sold by an auction house, if you look, the two major auction houses being Sotheby's and Christie's, there are warranties that you can get which last about 5 years that make sure that you know that if it's a Monet, it is a Monet. But you've got to really have expertise advising you. And the difference, I remember we had somebody selling a Monet and he said, my Monet is just as beautiful as that one. And he'd paid $1 million and the other one was worth 20 million. They were totally different pictures. If you put them side by side, they were totally different. But to an untrained eye, they think, oh, well, mine could be just as good as that one. And people make the mistake of not really knowing what they're doing. And if you enter the old master market, which is the trickiest market of all, most complicated, but most academic, most well-researched, do you have to have proper expertise to go in that
Well, can I say that? Yes, in fairness, just to be clear about this, you know, we've bought a few things over the years, and you're saying they weren't quite what we thought they were. You know, in other words, we bought something, it was attributed, it was dirty, I don't know, there was some history around it, and we took a chance. And having taken a chance, we had it cleaned, had a look at it, did the research and so forth, we actually found not only was it not worth more than we thought, it's actually less than we thought. Now, it does happen.
Can I be clarified? Can make it absolutely clear for everyone here? Can you rehearse what are the different categories of authenticity in the automatic market? There's after, there's in the school of. There's so many variations on authenticity.
Well, I'm not sure any of those are authentic necessarily. There are different categories which determine the nature of what you might call autograph material. In other words, is it by the artist himself? Is it by his school? In other words, people who are either working with him. A lot of people worked a long time ago in studios, or a lot of them working as a unit. Is it in the manner of the artist? Is it after the artist? Is it, you know...
Yep, got it, that's
you've
fine.
Got an idea.
Leave it there. Is anyone able to talk about the modern levels of authentication, the levels and the degrees of authentication in the modern market? Is it easier? I mean, I think I know the answer, but is it easier or is it harder?
It's the same. It's all about asking questions.
Yeah.
Many contemporary artists will have a certificate or some kind of documentation that goes with works of art which they sell. And if you buy from auction, you should make sure you get that documentation with the picture.
The documentation, that's the good thing about the modern market is there is usually documentation.
Sometimes documentation.
Sometimes documentation. Do you want to talk?
Well, can I say, in some ways, you know, when we talk about old masters, sometimes the provenance is very well documented. I mean, it's very detailed indeed. You know exactly who owned it and where and so forth. So actually, it's very well, you know, you can almost like an audit trail.
From the Orleans sale onwards.
But be careful. I mean, if you're investing, I had an institution ring me and said they reserved $1 billion collection of art that was in the Geneva Freeport, and they wanted us to check it out. But they wanted us to sign confidentiality agreements, they wanted to fly 15 of our team over to Geneva to have a look at it. And I said, look, we don't need 15 of our team to go and have a look at it. If you tell me either the name of the seller or the top 5 pictures in the collection, I'll tell you whether they're right or wrong. And he said, well, you know, that's going to be very complicated. We've got a file this big. I said, the bigger the file, the more worried we are as to whether it's right or wrong. I said, if you just tell me, you know, if it's the Mellon collection or the or Rockefeller, or one of these famous names from, you know, it's probably right because they bought carefully, or there are lots and lots of incorrect works of art being piled out on the market. In the end, they faxed over, we signed confidentiality agreements, they faxed over the top 10 artists. We sent it over to our experts. They came back within 4 minutes and they said, the value of this collection couldn't possibly exceed 20 million. And nowhere is it going to get anywhere close to. And this is a lot of art that they said was by this artist, by Rembrandt or by Rubens or whatever, but actually it wasn't. It was just by a circle of, similar to, and they got some professor in Turin or somewhere to write a long essay why he thought it was by Rembrandt.
And let me just add this. The picture which you sold in 2002, The Massacre of the Innocents by Rubens, for £78 million, the original archivist got it wrong. So very often the original attribution was allegedly wrong. So you're looking at pictures which were even incorrectly attributed when they were made. That was a prime example.
Slightly. I think that, first of all, it's a magnificent picture, and I think it was much doubted by Rubens. The problem is that scholarship is a competitive field, as in every other endeavour in life. And I'm sure Philip, Lucian, and Clare will say the same thing. You mentioned before, Philip, the idea that this fund had got some professor to, you can pay anybody to do anything. Having a professor give his name to it means nothing.
You're not suggesting that people are influenced by other thing other than integrity, are you?
Well, God forbid, on this panel, God forbid. But the point I'm making is that don't rely upon what somebody may say. They say anything you like. People are, I think say, it's quite right. There are certain leviathans within the old master world. Rubens is one, Rembrandt's another, arguably Titian is a third.
And now's the time to recommend this book, Bareham.
Well, if I were talking about...
An indentured critic or scholar.
Just to give a bit of backdrop, we were talking outside about things we might talk about as part of the wider discussion. And I said, it'd be interesting to have a conversation about books you've read about art. Whether it's great museums you've visited, or fantastic collections, or interesting lives. And I said that if there are 2 books you read, I really recommend for everybody. One is a fantastic book by a fellow called Sam Behrman about Duveen. Duveen was arguably the greatest art dealer of all time. So nobody seems to have heard of him, or very few people have ever heard of him. This is a guy who had probably every single major American tycoon in his pocket in the early 20th century. From Rockefeller to Mellon to Carnegie to Hearst to Frick, the whole lot. And he was a brilliant salesman. He bent the rules to himself, but there was a different world in that time.
And he had an indentured art
He had a fellow who worked with him called Bernard Berenson, who was a brilliant scholar teaching Italian Renaissance paintings. And he basically would say to Bernard Berenson, look, I would appreciate it with the benefit of a stipend if you would say X is by Y. And who was to argue? So all I would say is that, be very careful.
But the market is clean now, isn't it, Lucian? These things don't go on anymore.
It's still complicated.
It's complicated. So we'll leave that. We'll put that aside. The one market we didn't look at, we've looked at 2 of the major investment markets, old masters to some extent, and moderns. Contemporary we've looked at already. Chinese. Now I'm going to talk about Chinese very, very quickly because the Chinese market is not just contemporary art, it's also antiquities and antiques. Now you can't trade in antiquities in China. It's virtually impossible. All the tombware is off the record. You can't trade in it. You can't export it, and you can't really be seen to dig it out. The work in the Chinese market, which has attracted all the money, as much as modern and indeed contemporary, are the ceramics, because they're rain-marked, they're stamped. That's their provenance. It's actually on the vessel itself. It's also one of the most inventive periods in Chinese ceramics. So that market, I think, is probably as much of a minefield as old masters, and particularly when you look at paintings and other artifacts such as jade. So, if you're going into markets like that, you need not only expertise, you need to have consult in great depth. So apart from contemporary art, and to some extent modern, which can be understood intellectually, what we're saying is, I think, virtually every other market and sector needs some element of connoisseurship. I think we can live with that. You're not going to disagree with that, are you, Howard?
I
Good.
disagree with everything.
No.
You disagree, I don't know.
You disagree with everything, so
I think listening to the conversation so far, most of you will be absolutely terrified of putting a cent into art.
which is not what you want, is it?
No, I think it is what I want, because I think everybody's got to go into the art market with your eyes open. It sounds easy. You read the press and you think, Rothko, you could have bought it for 7 million, now it's 70 million. Picasso was, man with a pipe, made 104 million. It's an easy way to make money. There is a huge amount of money to be made in the art market. Steve Cohen is not only about power, it's about passion, but it's about making hundreds of millions or billions of dollars out of his art collection. and he's probably the biggest art fund in the world, but it just happens to be for one person. Super smart, researches, he has a whole team of people doing research for him, and he focuses on the Impressionist, modern, and contemporary markets. If you look at the Rothschilds, the Rockefellers, the Mellons, they probably made more money out of their art than they did out of their businesses. They piled money with connoisseurship, with advisors. Wealthy people can afford to hire the best advisors. And to hire an advisor, if you're spending 10, 20, 50 million, to hire the best advisor, even if you pay $500,000 or $1 million a year for, which you might pay your money manager to run you could get amazing advice and an amazing insight. And then people go on about it's an insider's market, only, it's insider trading. It's not, there's no insider trading going on in the art market. What goes on is people who do their homework, who find out the facts, do their research, spend a lot of time in the market, can make a great deal of money, or people who hire advisors who can do that for them. And that avoids all the pitfalls of going into some of the areas, and we've elaborated on some of the pitfalls, which are rightly highlighted, but also it's extremely interesting market because it's one of the last asset classes that is really underinvested in. There are huge amounts of opportunity here. I think that the amount of money that will pour into this market over the next 30 years will make the size of the art market tiny now to what it will be in 10 or 20 years' time, mainly because what we're seeing is with stock markets collapsing recently in China and so on, people are suddenly, yet again, opening their eyes and saying, wouldn't it be a bad idea to have 1 to 5% of our wealth in art?
Which is
1 to 5% of our wealth in art smartly bought.
This is a very good point to leave, Philip, for a moment and actually broaden the debate to talk about, Clare, this is more your thing. These various reports that have been released since Barclays Capital in 2005, suggesting what percentage of a portfolio, in this case financial, but it could be art, let's look at art, should be devoted to art as an asset class. And the second question is, what percentage, how would you divide your art portfolio to produce a certain amount of return with the lowest possible risk? How would you, I'm putting you on the spot, but how would you, as a notional idea, how would you divide your portfolio?
Well, just for the people that aren't that familiar with the art market, obviously there's hundreds of different sub-markets all moving at their own pace and trajectory. So if you've got the time, if we live for forever, as they were talking about at lunchtime, if you can live for a very long time and you have the pockets, the thing to do is to have a very eclectic collection in different ways. As Philip said earlier, some things are going down at the moment just because contemporary at the high end is going up, other markets are going down. So if you want to have that's probably the most the biggest financial advantage of putting art into a portfolio of wealth is the diversification possibilities of it, and things like transferring wealth through generations, the tax advantages of doing that. That's probably a bigger. Returns are going to be whatever they're going to be. It just depends when you get out, when you need to get out, all those kind of things, and they can be up or down. But if you can diversify risk by including various segments of art in your portfolio, that's probably the key financial advantage in my opinion.
And much as we love Philip's fund, the British Rail Pension Fund, which opened in 1974 and didn't close till 2001 or something, or it was very late, the last things they sold, is the model study. Google British Rail Pension Fund, and Philip's will soon be a landmark fund, I'm sure, but it hasn't finished yet, hasn't closed. But this fund is the only fund which opened and closed, and it produced 11%, I think it was 11% a year or something, after inflation. I think it was an enormous...
No, it was before. I think one's got to put art, some people say, am I going to make a ton of money out of investing in art? If you're super smart, you take a high risk strategy and you have a very good advisor, you take a particular area, you possibly could make a great deal of money. Some people have made 100% in a year, 200% or whatever. If you want to do it carefully and sensibly, art, and most of our clients look at it for 5 reasons. They look at it as a store of wealth. They look at it as an inflation hedge. They look at it as a currency hedge, because you can sell your Picasso in London, in New York, in Paris, in Hong Kong. So, and they look at it as it's movable wealth. You can roll up your Picasso and take it from Syria and take it to London or Geneva in a time of crisis. And so there are about 5 or 6 good reasons for owning art, and making money isn't the sole one, obviously. And then in addition, you've got the enjoyment and the passion and possibly the power it brings you by having Alan Bond had these so-called irises or whatever it was sitting behind him. It actually wasn't the picture, but he had a copy of it sitting behind him. And he felt that having a $70 million or $100 million painting behind him made a big impact on his clients. Art can produce, in my experience, anywhere between minus 10% and plus 15% returns on an IRR basis. So you can lose money if you take a high-risk strategy in a niche market. For instance, Middle Eastern art, highly risky, not necessarily going to make a ton of money out of what is quite a tiny market. Whereas if you invested in the contemporary and modern, or if you look at the guarantee auction market, there are opportunities to make maybe anywhere from 5 to 15% compound return. But it depends what period you're in. I was running money in 2008 when the market tanked shortly after all the Lehman. Basically the market froze. It became highly illiquid. People couldn't sell, and no one would buy art in end of 08 and beginning of 09. But boy, did the market come back very fast in mid to late 9, while the stock market was going nowhere. Art market, you were seeing world record prices in the art market. So I wouldn't say put all your money into art. All I would say is if you have the right advisors, if you're smart, if you know what you're doing, it's a really, really interesting asset class that most people have overlooked for the last 50 years, but some of the smart families have taken an interest in.
This is all, can you hang on one second?
I can.
Sorry, I know
Just one second.
Release your breath now.
Just the one.
Something was going on. Now, just saying, we've looked at the problems. Now, Lucian, perhaps you can identify the costs of ownership. I mean, it is substantial, starting with your hefty
very reasonable commissions.
Your very reasonable commissions on the buyer and the seller.
Yes,
often.
both sides.
But that would be, I think people need to know the cost of ownership.
Well, if you're going to look after, for starting to go back one stage further, I never describe art as an investment. It can happen to be an investment, but when I'm speaking to collectors, I'm always saying to them, you should buy what you're passionate about and buy the very best quality you can.
Sure.
And again, following from what you just said, interrupting the flow, you mentioned the British Rail Pension Fund.
Yeah.
The thing that was important about the British Rail Pension Fund and their results was they only bought best in class. So they had a collection spanning antiquities through old masters to contemporary, but in every category they bought blue chip.
Yeah.
And that's really important to their results. But going back to the costs and the responsibilities of owning art, you have to conserve art. You have to make sure that it's well looked after. So it may be sensitive to light and humidity. There are insurance costs. There are also difficulties in import-export. So you mentioned
Cost of import duties.
Import duties, but also for work of
GST.
artists in Syria, it may need an export license to leave Syria.
Exactly.
And without an export license, if it's smuggled out, then its value may drop to 0 because it's smuggled and therefore can't be sold on the international market. And also, of course, being a chattel, there are possible taxes on inheritance and so on.
Yep.
But you can defray any of those costs. Many collectors we work with will buy works of art at auction or from dealers, but will then lend them to museums, and museums will give you full insurance coverage or an indemnity in respect of loss. And also, if you lend to a museum, it's a philanthropically good thing to do, but also the fact that it's been lent to a museum and it's been accepted by a museum will actually add to its glamour and therefore potentially to its value. So there are material costs associated with it, but in a way no more than holding gold as bullion. It's a physical asset, it's a physical chattel which has physical issues.
Well, that's very, very, very true. Do you want to add to that, Howard? You were in mid-sentence. Or mid.
It was a different sentence.
Well, you were mid-sentence, but you were...
I
different
moved on a bit
sentence, I'm
to
sorry.
No, I agree with what Lucian says.
Yeah.
I mean, obviously, we lend a lot to museums and institutions here in America, all over the place. But we do it partly because our view as a family is if you're fortunate enough to own such lovely things in the first place, it's only right and proper you share them as much as reasonably possible. So we lend, some places you'll know, some places you won't. But we were never really motivated by the financial dynamic as a priority. It was obviously a factor. Of course, we couldn't ignore that. Every asset has a value. But it wasn't a major motivation. The real pleasure was the fact that we enjoyed the process. And when I was asking you, all the people you're talking about, do any of them actually profess any interest or love for art?
Of the people that we look after, obviously our main client is looking to invest in art as an asset class or make money out of art. We have an advisory arm that looks after major collectors, and some of them incredibly successful. They're all very successful entrepreneurs. All our clients are self-made money, ironically, and about a quarter of them are so passionate about art that they probably spend 15 hours a day studying the art market, going to every art fair, going to all the auctions, and some of the big, one of our Chinese
15
clients.
hours a day?
Yeah. Literally, they hardly
They don't sleep.
They read books. I mean, one of our Chinese clients who's flying over today, he will finish work and he will then spend most of the night reading up about whichever artists he wants to brief himself on, and he will ask us to summarise in 40 pages what is in tons of books. And that's what he wants. He wants due diligence done.
Is he focused on one particular area, one particular genre, or
He
field?
just suddenly decided that art is everything he wants to be involved in outside his business. His business is a way of making enough money so that he can spend it on art. And now art is the only thing he wants to spend that money on, and he's going to spend 5 million this year, 25 million next year, and maybe we have 1 or 2 clients who are who are spending around 200 million a year on art.
Yeah,
Huge
they
amounts of
mentioned it
money.
in terms of looking at
Where does it go? They share it with everybody, or is it just?
Yep, they lend it out. They're very happy to lend it to museums.
Oh, great.
Any possible opportunity, they'll let it go. But they just love it. They're addicted to it, and that's the fundamentals behind the art. That's some of the fundamentals behind the art market.
I mean, the other thing which we haven't mentioned, which is very unfashionable, is the cost of opportunity cost. What you could have done with that money, what it would have been doing if you hadn't been lost in art, which doesn't give you a dividend. It gives you some enjoyment, which a Swiss economist worked out at 20% of the value of the picture, because that's how long you spend looking at it, compared to what you're earning. So while you're idle looking at your picture, you're actually wasting money, aren't you?
Well, can I
And
say
that's your dividend.
It might be your dividend. I'm not sure it's my dividend, but I mean, first thing I would say is, we're talking about art as though somehow it only reflects a painting on the wall, and there are numerous categories which we well beyond that. We're talking about, I don't know, jewellery or glass or ceramics.
You can use a functional almost.
Absolutely. I mean, in a way, you're talking about
Bibelots.
people can pick the thing up and take it. Well, they could do, but some things are not quite supportable. One of the problems you were talking before about the decline of what brown furniture, Georgian furniture, is the fact that in modern times, homes are not actually equipped to accommodate them. People live in apartments. These things are absolutely enormous sometimes. They're not practical, and therefore, where do they go? You can't sort of take them back in the car, because you've got a truck, which most people do not have. So all I would say is opportunity cost. Depends how you measure it.
Are you saying you should buy something very small and portable?
Well, judging by a lot of contemporary work, it's the size of this room.
I mean, there's a lot to be said for portability in the art market, isn't there? I mean, if you can carry it around with you and you can escape.
That's why jewellery is so valuable.
Sorry?
Jewellery.
Well, jewellery is actually a very, very liquid asset, isn't it, compared to others?
It is. But what I was going to say is it's not so much an investment, it's more that art can be a reservoir of value.
That's
And again-
much nicer. A reservoir
No, I
of
give
value.
you
I
an
like that,
example.
yeah.
I was with some clients a few weeks ago on the west coast of the States who had and still have a beautiful collection ranging from contemporary art through to old masters.
Yeah.
Very significant value. The collector, self-made, actually was developing housing developments. And in 2008, the market crashed, the housing market crashed, and he suddenly needed to finance his loans against the property and was at risk of foreclosure. So he spoke to his wife and said, okay, we'll let these 3 paintings go.
Yeah.
We'll raise $35 million, and bang, he was back in solvency on his housing development, and the art had not actually made money, but it had been a reservoir of value so that he could access that value at short notice and raise the money. So for them, it was both an active collection, which they still have, the rest of it, and at the same time, it was a place of keeping cash, which was safe, and they could enjoy it all the meantime.
Yeah, well, that's extremely interesting. I mean, one has to bear in mind that even museums are not absolutely sacrosanct. I mean, the Detroit Institute of Art was very near to selling its city collection.
I don't know.
I mean, that had come on the market.
I don't know if it was that near to being sold, actually. I think, there was a lot of scaremongering in the press. The reality of the matter is it is a fantastic collection, no question at all, one of the best collections in America. The problem with, was you're in Detroit, that they had huge economic problems because massive pension deficits and mismanagement over a period of decades. And they looked at the art collection, I think it's a very simple way of just getting some liquidity into the system. But I think, I don't know what it was valued at. I mean, billions.
It was with 4 different estimates. One with Christie's and one was hugely disparate estimates.
You were saying. You're saying
I mean, it was
that's what makes a
extraordinary
market,
how
it's
difficult
very
it is.
difficult.
We didn't value it, we refused to value
No,
it.
very sensibly.
I mean, just picking up on the comment earlier, I mean, what I found, a lot of real estate investors have also been very big art investors. And actually, in my experience, I've seen that the art has bailed them out in difficult times on the real estate. When real estate's boomed, they put money into art. And it's a really interesting asset that they've used at times when things get tough. And there's an interesting insight.
Well, actually, one thing I would say, if you're aware that in fact, Sotheby's and Christie's both have very, very successful real estate divisions of their own that people somehow I'm not aware of. And that's actually underpinned both sets of the business.
This is just alarming me, this thing, but I've now just worked out what it is. It's 3:20 and time is going the other way. I've got it now. That'll be 9:21. Yeah, that makes sense. So we will open up the floor to questions, and I'm sure they're very many. I can see people's lips pursed and ready, the tongues articulating something. Can we just end on one thing, a point of agreement, if possible? And that is it possible to talk about art as, in terms for investment purposes, contemporary art, for the sake of argument, since we're in the Milken Institute, a junk bond?
Is contemporary art a junk bond?
Is contemporary art? I mean, can we use that terminology so people can understand what we're talking about? Contemporary art as a junk bond. I think modern art, stroke, impressionist painting, blue chip, possibly post-war shades of blue, and then finally a gilt-edged security, an old master picture or a Chinese pot. How do you feel? Can you sit with that, Howard? Or no, I didn't think so.
Well, you might be very comfortable with it. I can't do that very well.
I can't do that either.
Who can sit with that? See, none of them can. This is the art world. Nobody wants to admit that it's an investment vehicle.
Well, I don't think it is an investment vehicle. I mean, I think, obviously my position is slightly different because obviously I don't reflect an investment view.
But you come from an investment background, don't you? You come from the city.
Well, about 500 years ago, but that doesn't really count right now. So,
well, the Lloyd's Coffee House in those days.
Well, even longer than that. So yeah, don't get distracted by that kind of thing. That's very dangerous. Look, I think it's very simple. Art means many things to many people. Some people are motivated because, yes, there is an investment angle and they can see an opportunity to make money, whether quickly or slowly, doesn't really matter. Some people get involved because they have a passion and they love it and they are drawn to it by intellectual reasons. But I think in the end, the most important thing of all is to be true to yourself. I mean, why are you in it? What are you buying? Are you buying for the right reasons?
Kipling.
That as well. Okay, fine. Yes, we are stretching from art to literature. I'm delighted. Yes,
okay. I think at the end of the day, I think probably you are right. But it just shows you how difficult it is for us to talk in these terms. I mean, I'm struggling to talk about commodities, but I mean we all are. But that's how I think the new world would like us to address it. Now we've got 6 minutes and 38 seconds for you to ask us challenging questions. I think particularly our panelists. So what's the first one? Do you need microphones? Yeah, it's a small room. Please.
Art from some of the third world.
Can we use that term, third world now? Yeah. Emerging markets. Art from emerging markets.
Deep intake of breath. I mean, look at there's obviously India has risen. It tanked. There were a lot of investment vehicles came into the Indian market, put their money in, and then it collapsed. It'll come back. It'll take a long time. And yes, it's a very interesting area, but there's a lot of surplus from all those investment. People put a lot of money in thinking they'd make fast money. They did make fast money for a few of them, but a lot of them lost a lot of money. I did actually write a book, now sadly out of print, called A New Art from Emerging Markets. And I think Philip's assessment is probably wide of the mark, but nevertheless interesting. The Indian market is a very good example, actually, of one, as you say, that actually flattered to deceive, didn't it? It really did show promise and then crashed. I mean, if you're a pension fund taking a 50-year view, you should be buying what these guys have been doing. It's going to old masters because it's very inexpensive right now. It's extremely rare, and in 50 years' time, it'll probably come bouncing back. Right now, it's not that in fashion. You could buy unbelievable quality art for $1 million, and you wouldn't even buy a second-rate contemporary picture for that. If you go to Frieze, you'll hardly get anything for that. Anyone want to talk about new art from emerging markets or?
There's a huge local market for South American art, for Northwest Coast, for Canadian art. We sell Indonesian paintings, South Asian paintings.
Tends to be cheaper than the mainstream markets, so presumably the returns can be greater over.
They all tend to be at a lower price level, but in each category there are blue chip artists. True. So for South American and Latin American, you're looking at Botero. In South Asia, you're looking at Hussein. In each market, there will be a standout blue chip artist.
A lot of these markets tend to be very insular. You know, India really has not developed in the way you would expect it 20 years ago. And you look at markets like, I remember looking at markets like Spain years ago, and there's a lot of Spanish art, whether old masters or contemporary, took a long time to filter out. Spanish are very proprietary, they didn't want anyone to share it. And therefore, you know, to me, I look at it on a case-by-case basis. Clearly there are economic trends which obviously define the flow of capital. And of course, you've got to bear in mind, with the art world, it is ultimately governed by sentiment and emotion. It is not something where you can look at in a mechanical way where there's a set of criteria and you drill down the list. This doesn't work that way in my experience.
Did you have a question?
Thank you all very much. It's been amazing. Just want to ask you very quickly, the cost of carry of that Van Gogh you talked about, which was from 9 million to 23 million.
9 million, 63 million, yeah.
You lost 40 million on the way, gosh.
What do you estimate the cost of carry was?
The cost is, everybody, I remember sitting in an audience, they say, well, the insurance is very expensive. The cost of insurance about 1,000 per million, right, per annum. The cost of storage is a few £100 or dollars per piece. And the shipment cost is a one-off shipment cost of maybe a couple of thousand to create it. And there was a transaction cost when it was bought of about 5 to 10% in 20 years ago. So over the period of that 20 years, those costs were tiny. If you don't know what you're doing and you come into the art market and you have a go, the cost of doing business could be as high as 40%. If you do know what you're doing and you do it professionally, the cost of holding an artwork might be between 0.5% and 4 or 5%.
That's useful.
Isn't one of the ways of lowering that cost doing what Mr. Lewis does, where basically you put it on loan so you don't have to carry that cost of ownership?
It saves you on that insurance cost. That's the main one. And it actually, putting it out on loan, a lot of clients love it because it gets their name in lights, the work's name in lights.
Can I tell you a very quick story? I'll be very fast. We lent something many years ago to the Vatican, arguably the richest institution on earth, who said to us, you know something, they couldn't pay the premium themselves, so they had run out of money. I think myself, it's like, if the Vatican's run out of money, we're all in serious trouble. You know, it's like
Cash flow.
I was just curious if you have any piece of advice other than buy what you like when it comes to, say newly created contemporary works at price less than 50,000. So, understanding that this is not, pension fund asset class type items, but you're just browsing an art fair. Like, what do you look for?
Oh, good question. I mean, freeze is on us. Anyone want to talk about anything under? What have you got? $50,000 to spend?
Can I say, what was the question again? Sorry, I wasn't.
You've got 50,
Those were the experts rather than for me.
$50,000 to spend. What would you buy?
$50,000.
Yeah.
I wouldn't say buy art. I think there's some great stuff in the decorative arts, completely overlooked.
I totally agree.
Completely overlooked. There's amazing stuff. It's like
I agree.
if you were to go around some of the decorative arts fairs, for example, you'd find some unbelievable bargains.
Absolutely agree.
There are a few young contemporary artists. I mean, I made a dreadful mistake when we bought many years ago, about 8 years ago. I bought a Wade Guyton for $40,000. I sold it for $120,000, and I nearly threw up when I sat in Sotheby's sale as lot one, and it made $2 million. That was my worst investment decision. But if you were lucky enough to own that Wade Guyton, you would have made. If you'd owned 3 of those, you made $6 million.
One more question. 53 seconds. No? Well, it's good to sum up then. Sorry.
Can I ask, I can tell the panel is very passionate about it. My question is, increasingly as this becomes an asset class, like you said, the less and less control you have over the ownership or who owns it. How do you get yourself motivated when you oftentimes see a piece of art hanging someplace where they have it only because they can afford to buy it, not because they have any understanding or appreciation of it?
I have a simple answer. There's so much art in the world. I know we're talking about rarity, but there are so many things out there, and eventually it'll come out. You see it in the home for 10 years, that person will get divorced, they'll die, they'll go bankrupt, and it'll come back again. And so in my time at Sotheby's 20 years, I've sold the same painting 3 and 4 and 5 times. They keep coming back. And originally I thought, oh my God, it's terrible, these are out of circulation. Now I think it'll come back. And it's like speed dating. They just keep coming back and back and back.
A nice point to end. Thank you all very much for attending, and thank you to my panelists who were eloquent as ever. And enjoy the rest of your day.